It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal, to help cut through that noise to navigate the best moves for your portfolio. Today, we're looking over the artificial intelligence landscape and how the AI boom extends past the semiconductor industry. Let's bring in Matt Higgins, RSE Ventures co-founder and CEO. Matt, it is good to see you. So let's get to your first buy here, Matt. Now, it's a name that some investors have been kind of skeptical of year to date. They have their concerns. It's Apple. You say this is one to own, though. So let's go through the reasons. One, you say Apple getting ahead on AI acquisition. Walk us through that.
Yeah, first of all, I've been really hard on Apple the last year, saying like, what are you doing? You know, you use Siri and it feels like the 1990s are calling and they want their phone back. But Apple might be in stealth mode. They have been gobbling up AI companies below the radar. I think they've bought 32 of them. And so clearly they're working on it, because if they don't, they're facing an existential threat to their very survival. So I think Apple has been keeping its head down while its stock has faltered.
It's a good point, because often with Apple, they're not known for big splash acquisitions, but they do make a lot of small acquisitions. Next point here, you say AI integrated iPhones are on the way, and you think that's going to attract those upgraders.
Yeah, there's an amazing catalyst coming. So if you look at Apple compared to the Magnificent 7, it's been like the Malevolent 1, if you're a shareholder. So it's terrible. S&P up 25%, it's flat for a year. However, though, Apple at the end of the day has data, it has proximity to the customer. If you think about using ChatGPT, it's kind of a crappy experience, right? You want to be able to go onto your phone. So they have an ability to go directly to the customer. They have 50% market share into the US. So it makes sense that Apple will dominate, but most importantly, it has a catalyst coming on June 10th, its developer conference.
That big software show. And finally, another point here, could provide the fastest road to AI adoption. What do you mean by that, Matt?
Yeah, just once Apple launches something, everybody's paying attention to it, right? So they haven't had like that hot killer feature that's made you lean into their upgrade cycle, but they have a new phone coming out, the iPhone 16, new update coming out, iOS 18. So if they get this right, which I think they're going to, instantly everyone is going to be integrating AI into their lives.
No, we hear this argument from some bulls, Matt, and it's a good one, which is that as AI moves from data center to edge, Tim Cook, he controls the software, the hardware, the chips. When he wants to, he can move very quick.
Exactly.
Finally here, what is the risk to this call, though, Matt?
All right, well, so I'm an attorney. I don't practice. I graduated law school, so I put my lawyer hat on. This is a terrible case. Now, however, I could be wrong. The Department of Justice is coming after Apple, saying that it has a monopoly. I think it has a lot of market dominance, but it is not a monopoly, but you never know, so that is a risk.
Okay, moving on here. So Apple, we know you like. Let's talk about one you don't like, which is ARM. This one, Matt, you are telling people is one to avoid. Let's walk through the reasons. One is just valuation.
Yeah, look, I took part in the IPO. I was happy to ride along. It opened up at $55. It shot all the way up to $140. But at the end of the day, ARM was relatively early in the AI splash. People were looking for different ways to chase Nvidia. As the market becomes more sophisticated, they start realizing that, wait a second, ARM is way overpriced relative to its peers. Maybe 100 times forward earnings. There's just a lot better ways to play it. So I'm not a buyer here at this price.
And your second point, we were talking off camera, Matt, about this. Really what you're saying here is, in your opinion, ARM is it's commoditized, in your opinion, versus rivals.
Right, so it doesn't have a moat. Now, most people don't have a moat, but in this case, there are some who actually do have a tremendous advantage. Taiwan Semiconductor, Nvidia, that is not ARM. ARM sells microprocessors. It's an IP enabler, but at the end of the day, they don't have pricing power, as evidenced by the fact that they can't get Apple to pay more than 30 cents for licensing their microprocessors. They have no pricing power, so that limits their upside.
And final reason you would avoid this one, Matt, you say, basically you're asking, is ARM following Nvidia's lead? Yeah,
I'm basically saying it's been bid up because of the frenzy. The AI phenomenon is very real. There's going to be a lot of money made over the long term, but as the customer gets more sophisticated, the market gets more sophisticated, they're going to look for better ways to play it. The reason why I think it's held up so well is that SoftBank owns 89% of ARM. So what if SoftBank tires of it and needs liquidity and starts to shed that stock? Then watch out.
Yeah, concentrated ownership. And finally here, Matt, same question. Where could you be wrong on this one? What's the upside risk?
Yeah, two things. One, Google just announced a partnership with ARM. It's going to lean on ARM to go ahead and try to create an Nvidia competitor. I don't buy it, but it's possible. And the second thing, it might take some time for the market to figure out that ARM is in fact overpriced. So maybe you have some time to ride along.
All right, Matt, let's sum this all up for viewers right now. You're telling retail investors buy Apple as it bolsters its AI capabilities through acquisitions and its influence potentially driving consumer adoption of AI at an unprecedented scale. On the other hand, though, you're saying avoid ARM as it is overvalued, more commoditized versus rivals, and ownership just too concentrated. Thanks so much for watching Goodbye or Goodbye. We'll be bringing you new episodes 3 times a week at 3:30 p.m. Eastern.